Hello everyone. Welcome and thank you for joining us. And to those of you who continue to pile in, we're thrilled to have you here. My name is Stuart DeQ. I'm the Executive Director of the Yale Center for Business and the Environment, which is a joint initiative between the School of Management and the School of the Environment. This is one of our series in our Authors Talk series where we're hoping to, while we can't nourish you with food during the pandemic, we certainly can hopefully provide and nourish you with a bit of knowledge. And the series is really based on the premise of finding and connecting people who have kind of gifts of writing and listening and expertise, and where they've got this humility and kind of ability to converse about really challenging topics. And we've got two folks who have been connected to the center in different ways for a while, and really honored and humbled to have them here. Vincent Stanley is a resident fellow at the center. He's the co-author of Responsible Company, and was the third or fourth employee of Patagonia, who's the director of philosophy there. Judy Samuelson is a graduate of the Yale School of Management and has been running the Aspen Institute's Business and Society program, building it, kind of working on it, working in all sorts of networks for 30 some odd years now. Is that?
No,
25 with the Ford Foundation before that was sort of related. But and it's a really interesting, it's a real pleasure for us to have these two folks here, because they're characterized by things that I think when we want to tell students and others of what lasting impact should you look for and have, when you look to people like Vincent and Judy, they've shaped and changed organizations through kind of creativity, blood, sweat, and tears over time, and really sought to kind of change cultures and influence broader conversations. And I think one of the things that I've always been so impressed by both of them is, like, there are people who give you sort of snatches of magic in conversation where you kind of know you're being listened to and your brain is lighting up in different ways, or you can kind of really see that they get what you're talking about, or they can push you in different ways. And like Vincent and Judy both have that kind of gift for listening. And I also think that personally, that's what makes a really good author, because you're able to listen and then distill and kind of figure out where these themes are. So today, we've got a wonderful book by Judy, The 6 New Rules of Business, which Heather Fitzgerald on my team is going to drop into the chat. This is on an Amazon link, so you can purchase it today. And we're thrilled that you're able to join us, Judy. Thank you for the time today. And Vincent and Judy, the floor is yours. Oh, and sorry, Q&A function. Please, as questions are coming to you, put them into the Q&A. Vincent's going to get to them. We're going to go over those a little past halfway through the conversation, so you can then drive the dialogue between Vincent and Judy.
Okay. Thanks, Stuart. And I'm really delighted to be here with Judy. We met, the first time we met was fortuitous. I came over to her office in New York and we started to talk. I think we had about half an hour allotted, and it went on for quite a lot longer. And ever since then, I've been receiving the weekly messages called Ideas Worth Teaching from the Aspen Business and Society program that Judy founded and has run for 23 years. And what I find is when I want to interpret what I know or what I've learned or what I'm thinking about at Patagonia, which is a fairly small, by publicly traded standards, privately held company, I look to what Judy has to say. She has been arguing passionately and intelligently for about 3 decades for the ways for a kind of business that serves society rather than the other way around. And I'm just really delighted to be back and speaking with you, even if it's on Zoom and it's not in your office overlooking a rainy New York. I wanted to just also provide just a little bit of perspective from my side of the fence. Again, I don't have an experience. I started working when I was 20 at Patagonia. It was a really tiny company now. It's grown to where it is. But what we have done as a company has everything that we've done in service of society has been pretty much a matter of stumbling into virtue. We didn't intend to be good guys. We just found out that we were being bad guys in various ways when we found out the harm that conventional cotton does to the soil and to the planet, and when we found out the harm that neoprene does in wetsuits, et cetera. So we would go through this kind of Socratic process and say, okay, this is a problem. How do we solve it? Can we solve it? And come up with something that was usually fairly difficult, but in the long run actually helped our business. But we have not been involved in publicly traded businesses. There are only about 3,800 of them left in the United States, but they of course represent huge amount of capital and a huge number of employees. The discovery that we have made along the way, I think, as the climate crisis continues to intensify, as our natural resources are drawn down and degraded, we really feel strongly that at this point, business really has to address the social and the environmental crisis, that it's not going away, that it's not the function of government and NGOs solely to address this crisis. And almost most importantly, we at least have the responsibility to clean up our own mess, to clean up what the harm that we cause in the course of making our products or offering our services. So it's from this point of view that business has to justify its social license, that we really have to not only have a purpose, but have a good one, and to execute that purpose in the right way, and to do it in conjunction with governments and NGOs. It's from that point of view that I approach Judy's work, in which she's really addressing a very different audience and talking mostly about these large companies, and she knows how it works. So with that, I'd kind of like to just start out, Judy, and ask you, you have been writing for years, column after column on business education, CEO pay, the purpose of business, but this is your first book. And I'm curious as to, after writing, speaking, advocating for all these decades, what motivated you to write the book, and how did you come to write it?
Thanks for the question, Vincent. Thanks for making this conversation between us possible online today. I'm really very grateful to be with you at the table, with the proverbial table. And shout out to Stu, fellow traveler of many years as well, and to my own community there, Yale SOM. It shaped how I think, and didn't attend the forestry school, but deeply admire those of you who have both taken these two educations and woven them into something really a beautiful thing. And so it's wonderful to be here today. There are many answers to why I wrote the book. One of them is I needed a break. And I was 15 years into the building of the Business and Society program, and I ran into somebody who said she had just gotten back from a 6-month sabbatical. She worked for Cliff Bar. She was one of our fellows, and thinking, how do I get one of those? Well, I never got a 6-month sabbatical. I run a nonprofit. I managed to eke out 2 months, one where I worked from home like I do now, and one where I managed to land a fellowship at Bellagio with the Rockefeller Foundation. And I had to tell them I was going to do something useful with the time. And I said, well, I'm going to consolidate what we've learned about driving change in the business sector. And that was 8 years ago. And there's been a lot of fortunate circumstances that enabled me to actually consolidate my thinking here, including having an editor at Barrett Kohler who really helped me frame the book in an important way. But I'd say I really wrote it because I really, for two reasons. One, I believe so profoundly that we will not address our most consequential, questions, these what we call these existential crises, and they are indeed existential, from climate to inequality, without business fully at the table. I love B Corps. I see what they do for people who are already inclined to move the needle. But I always tell people Patagonia was Patagonia before it was a B Corp. And it has been true to what you've talked about from its founding. And it is about leadership, and there are many things we could talk about, but we need regular old C Corps at the table. And so that's one thing, to try to tell the story there. I also really wanted to do this because we spend a lot of time working with change agents, both people like me who sit way outside the firm, but also those who are embedded inside through our fellowship programs and networks and the like. And I wanted to draw attention for those of us who sit outside business to try to get back to what I think of are the blind spots as well. I mean, the book is about change, but it's also about what are the things that hold us back. But I think about blind spots in two respects. One, things that really impede business from aligning business with the long-term health of society that we still need to address. But also, I think those things that on the outside that we tend not to see. We don't look at the underbelly of what really drives business decision making. And I'm talking now about public companies principally. We don't see how the metrics and the decision rules and the incentive systems, how that business is not good or bad. Business is a bundle of it makes good and bad decisions based on a whole host of different things. And I kind of wanted to draw people into that story, how change takes place, and what are these things that kind of drive business behavior.
Yeah. What would you see? I'm curious about the phrase blind spots, and what would you see as the biggest blind spots for the leadership of these large companies? What would impede their vision and make them not see something?
Well, I just got off of a webinar about an hour ago, less, about CEO pay, and it's really a passion, I guess I would almost say, of mine to say that it's a good example of a system that's designed for a specific result that is at odds with the voice today of executives who are speaking in sometimes passionately themselves about their vision for their enterprise, who speak passionately about their own employees, are listening in a new way to their own employees, are mirroring for their employees some of the concerns that the employees bring to work every day. And yet we have this system that is kind of, we talk about CEO pay in a limited way. People think CEOs are paid too much or whatever, but it's really a design question. And it's one of those that works absolutely in opposition to enlightened ideas about the purpose of the corporation and how we measure success. And so I would say that's one that's it's there to examine and to understand, but it's kind of a blind spot for those of us that inhabit this kind of ESG, social responsibility, CSR, envision business as an important agent of change. We don't tend to look at those kinds of questions that are really embedded in the governance quotient. We talk about the E part, we talk about the S part, but it's all about governance. It's all about how decisions are actually made and the protocols and rules of engagement. And so I think that's a blind spot.
Okay. It's interesting. John Elkington, who came up with the idea of the triple bottom line and how to, basically look at people and planet in addition to profit, issued a recall of the idea last year, saying that it had been misused. But I think he said that in a kind of, you can almost feel sympathetically about how people have tried to use it, but they still haven't come up with the metrics for their organizations in which planetary effect, or the effect on the social effect, is measured with any of the any kind of the rigor that that the profit and the balance sheet is looked at. One of the things I learned from your book that really struck me is, I hadn't put this together, is the idea that capital is so much less important in business than it was 50 years ago. There's so much of it. And it's growing every day, because 94% of profits are returned to shareholders, who are then seeking to invest that at maximum value. Can you speak a little bit about how you think that shift is affecting business, where the value comes into business if it's no longer vested in hard assets?
You know, it is a theme that links several of the principal ideas in the book. I'm going to forget the statistic of how many companies are going public. It seems that a lot still are, but I think we have roughly half the number of public companies that we did even a little over a decade ago. And yes, we're awash in capital. In fact, right now, as we all know, the interest rate is zero, basically. We're awash in capital, and yet it's, the language we use, the narrative, the how we measure success is still very much, even the language of ESG, which is kind of a conundrum for me, is very much drawn and characterized through the experience of the investor. We put the investor at the center of the metrics and measurement, which I think is completely and totally wrong. There are clearly investors who care deeply about the same things that you and I do, and that the Yale Center stands for. But when we try to design metrics for investors, we end up doing it in a simplistic way that I think John Elkington must have been speaking to when he retracted the triple bottom line kind of concept. You know, it ends up being about comparisons, simplistic comparisons between and among firms, because it's designed for asset managers who are trying to say, we've got this fund over here and it's a green fund, and you know, these companies are in it and these ones are not in it because of, and they need something simple to measure. I'm just going to reach behind my computer and grab a piece of paper because I want to quote somebody. I leave it here so I get the quote right. His name is Jerry Muller. He wrote a book called The Tyranny of Metrics. Metrics lose their meaning when used to reward or punish performance rather than to diagnose and analyze. I think the real agency is in companies. It's not in investors. It's not that we don't need everybody at the table and we all need to be swimming in the same direction. But business, when it uses metrics well, it's stepping back and saying, what is absolutely critical for us to land here? Yes, what is the purpose of our corporation? And what has to be absolutely true in order to succeed? Yeah. That is not stakeholder land. That's not everybody's the same and we want to spend 20% on, you know, of our time on each of them. It is a conscious, I'm talking to Stu as if this is something he doesn't believe in. You know, I'm not talking to you on this one. Patagonia is totally, you know, the Patagonia bleeds this. We can see it in the care of the design of the product, but it pays attention to the things that it knows it needs to get right in order to succeed over the long haul. And so, anyway, I think that's kind of, you know, this idea that we're designing the world around capital, where capital, in fact, is a abundant resource. It's probably the least important of the things to get right today. You know, people like Roger Martin have written extensively about this. The stock market is an aftermarket. You know, you buy and share, you know, you're trading shares between and among yourselves. Marjorie Kelly's book, The Design Right of Capital. What's important today is getting the culture right. It's not about appealing to capitalists. It's about the design of an enterprise that in fact is resilient, that doesn't operate as if sustainability is an end state. Sustainability is a state of mind. And I think that's probably what Elkington is getting at, that the powerful models today are not designed to say we've arrived. You know, what is parts per billion? We've made it. It's about continuous improvement. It's about, you know, the kind of ideas that we're all connected here, and the circular economy is one of those that's principle here. So I think it's about culture. It's about reinforcing those things that we know are critical. And frankly, it's about honoring the license to operate. Business is here because we grant businesses the license to operate. And respect for that idea has to be considered deeply by executives in boardrooms.
Yeah. You used a phrase in the book that I quite loved. And it may have come from someone else. It was the duty of the director is not on returns to the shareholder, but to the health of the enterprise. And I really like that phrase because it encompasses both the holistic look at the health of the enterprise, and also, as you just mentioned, what are the things that are essential to the enterprise? What are the key qualities? And even the issue of the bottom line, even the issue of profit, which is different from stock price, is often incidental in the short term to the long-term health of the enterprise, or the long-term meaning or value of the enterprise. So.
Absolutely. And I think one of the things that, you know, there's a lot of agents of change in this domain. And the ones that are really thinking deeply about what needs to be true for the corporation to be healthy over the long haul are the ones that are of greatest assistance to us. Whether it's NGOs that are actually looking at a resource that is threatened, or employees that are thinking about just whether or not this is a company that is going to sustain me and that I want to be a part of. You know, there are entities that are fully aligned with long-term thinking and fully aligned with making that company last and generate wealth in all of the best ways in which we can denominate and describe wealth. And so I feel like time frame is a huge question here. It's always been an organizing principle for our work at the Aspen Business and Society program. But I think that there's a lot of allies in this world. And one of the challenges in a way for executives is to be able to step back and see those clearly and to listen to them and to, you know, open up the executive to these voices that are fully aligned and care deeply about the company succeeding, because they know if the company's succeeding in the long haul, it's because they have been attuned to, you know, question of natural resources. They are attuned to the, you know, the kind of what's the right relationship with our neighbors and with the community that, you know, provides goods and services. You know, it opens up all kinds of questions that are kind of blind spots, like what's a fair tax?
Yeah.
You know, what do we do about contract workers that are not on the payroll but are working in our name but not having the same benefits? If you really start thinking long, it's where those lines converge and you start taking the measure of things that are not easy to measure, but which are absolutely relevant to the long-term health of the company.
Yeah. You speak a lot in the book. You have a chapter on employees you just mentioned, and how and not only, especially younger employees are bringing a kind of more demanding set of personal values to work than they did maybe 25 years ago. But you also mentioned, I was very intrigued about that employees, because they are embedded in the company and they're doing the work, that they're an important source of employees can help companies understand the risks they face and also identify competitive advantage.
Absolutely. Yeah,
And
absolutely.
I was wondering if you could talk a little bit about that. I think that's
Well, and I'd be curious if you think this resonates at Patagonia, since you're
absolutely.
in the
Yeah.
middle of a company here. You know,
Yeah.
I write about, one of the companies I write about is Herman Miller, which early on, because design was always at the center of kind of what made Herman Miller distinctive. You know, it was there before some of the mid-century, the great designers of, you know, coming off the Bauhaus and into the mid-century design aesthetic. They always had design at the middle, and that means they automatically made the enterprise was always a human enterprise. It always valued that human contribution. That meant because of the centrality of the employee and the kind of human element, they were way ahead of the curve on seeing sustainability as a question of design excellence. And so they kind of led, you know, there are other companies that have taken, you know, like Steelcase, that are also deeply embedded in these ideas today, but they were kind of ahead of the curve because of that. But no, the employees, it's a whole new ball game. You know, I call it accountability from the cafeteria, even though of course right now nobody's in the cafeteria, but they are in fact the accountability mechanism. It's not the investors who come in lots of shapes and sizes and care about these things sometimes, but not all the time, and tend to measure the stock price first and foremost in the public company. It's certainly not consumers who, you know, typically, I mean, we're bound to price and convenience, you know, and we've seen a lot of that in the COVID moment as well as some other interesting changes about consumerism. But employees are fully aligned, and they in fact are the ones with the eyes on the ground. You know, they can see the risks. They are the front line in terms of customer service. They are the ones that are managing through the supply chain. They are the ones that are negotiating this kind of these complex questions at the intersection of, you know, business and its license to operate. So they can see the risks. They also see the opportunities. And they're inside, outside, and they're really well equipped to connect with one another and to make change. And we're, of course, living in a moment, we're seeing lots of examples of employees stepping up and expecting much more than they've received. And so whether that's personally or in terms of kind of really having deep expectations of what the company needs to do on climate change would be another example. We've seen this in a number of companies. So it's really a space to watch, and the best CEOs are listening carefully to these questions.
Yeah, I mean, I think that it's intimately linked, this sense of understanding the risk and also identifying competitive advantage. I think our experience at Patagonia is that the more constraints we place on ourselves in terms of what we're willing to do, the fabrics we're willing to use because of their environmental implications or social implications, the more constraints we put on ourselves, the more we are forced to think through and to innovate. So what might be a typical process for business, which is to keep doing what you're doing at 5 and become 5% more efficient every quarter, i.e. go to your suppliers and ask them to cut their costs. Rather than do that, you have to rethink the whole basis of your products, what their use is and how they should be made. That forces innovation, which then creates new business for the company. There's another question I wanted to ask you, and really, it's interesting, you mentioned Herman Miller and Steelcase in the same breath, and I believe they're neighbors. I'm not sure.
They are. Well, yeah, they're both Michigan. Yeah.
Yeah, in Grand Rapids. And they, you also speak in the book about the cooperative capacity of business to address big problems at a pre-competitive level. And this is something else that we've certainly seen in the outdoor and the apparel industries. And I was wondering if you could talk a little bit about that.
Yeah, it's a great piece of the puzzle to understand, and it has changed the conversation to such phenomenal ways. You know, no one like a smart NGO to harness your brand and use it to their own ends, right? So anybody who's in the, you know, is in the consumer products or in the, you know, in your business, and oil companies. I mean, anybody who's got a big brand is at risk to an NGO, and the big environmental organizations have all figured this out. They all have internal units that do nothing but this. The smart ones have understood for a long time that you don't really influence, you enlist consumers, but you have to get really clever about how you enlist consumers if you're really going to drive change. And so I write about Jason Clay, who's kind of been the master of thinking about this through how do we narrow the lens and influence business more deeply. We start back with the commodities, those things that are heavily traded, but are kind of the underbelly of many parts of consumer products, either on food or beyond, and have boiled it down to the commodities that are the most important, and what are the 100 companies that use that commodity that we need to focus on, or what are the 100 companies that use most commodities that we can focus on. So it's a matter of kind of focusing in. But the example I write about that I think is, for me, is I learned a lot from is specifically around fisheries, which are fishes. I'm not telling anybody at the forestry school about how complicated that problem is, but the design by which an able interlocutor, in this case, the Sustainable Fisheries Partnership, led by a wonderful man who understood intuitively that we need to operate differently to really do this, led them to start to figure out how do we identify the kind of biggest change agent. In this case, we're talking about the cod industry in the North Atlantic, and the target was McDonald's. Is McDonald's the worst actor? Probably not, but they've got the brand that can move the needle by bringing their pressure to bear on their supply chain. And then you find the B2B provider who is the biggest within the industry. So the biggest producer of white fish produced products for a McDonald's ends up being a key part of that chain as well. And they kind of build a system whereby they raise the bar to make sure that the whole industry has to follow the changes that are forced on a McDonald's. McDonald's today is ahead of the curve. I mean, they're not waiting for NGOs to come in. I'm sure they still are knocking on their doors, but they've probably been at the center of something like 40 different campaigns, including one now on sustainable beef, where they're really leading the campaign. So it's pre-competitive level. It uses consumers in an artful way, but it really is about systemic change within industries, within complex systems, and finding the people at the table, and only those people who they need to work with to unlock the program. So I that's a little bit complicated. I suggest you buy the book to read it about it better. But I think, and you must have lots of examples of Patagonia, of ways in which you've been brought to the table, or you invented the game of starting at the pre-competitive level.
Yeah, it's interesting. We helped start, and with a very odd bedfellow for us, with Walmart 10 years ago, the Sustainable Apparel Coalition. And the idea there is similar, even though it's a cooperative effort it started with 15 companies, but now everyone's at the table. So it represents probably 40 to 45% of all of the apparel and footwear sold in the world. And that's a big enough chunk to influence practices of the rest of the industry. So identifying the environmental impact of factories, with creating baseline measurements by which improvements can be made every year afterwards, and identifying processes and the environmental and social benefits and costs of different processes in the mills, different fabrics, and then ultimately creating a consumer facing index to actually bring the customer into the conversation that is determined using the same methodology for all the companies, so you don't get into the battle over greenwashing. That's kind of where we use that phrase pre-competitive, because you're establishing the rules and the language.
Yes, the rules, exactly, the rules and the protocols, and that's the example of the fisheries, the cod industry in the North Atlantic is one where they simply changed the protocols and they forced all of those who are at the kind of B2B level to adhere to one set of protocols that pushed the rogue operators off the table. We simply wouldn't deal with them anymore. So it is leaning into kind of what's the long-term health of the enterprise, but it also reminds me, it's like, because I write about, one of the chapters is about the need for co-creation today, not just competition. You don't, these issues we're talking about here, the problems that you deal with at Patagonia, the problems that CBEY is putting at the center of education in a way that we haven't seen in the past. You simply don't address these problems one company at a time, whether we're talking about deep environmental concerns or we're talking about the kinds of social, disconnect and kind of divisions that exist in society today and that are rooted in inequality and unfair treatment. And, you don't tackle this one company at a time. You can make changes one company at a time, but you simply have to be at the table to be able to operate at more of a systems change level. And that requires collaboration and co-creation. Simply, it doesn't exist just through competitive advantage. Although, you certainly can have examples where some company leans into that and gets a positive push or brand or, an ability to attract talent because of their willingness to lean in heavily on a complicated problem.
Right. And I think we're seeing the effects of that vividly with COVID. Rolling out vaccines. How do you deal with this crisis? It's every force in society, from NGOs to governments to businesses, is engaged. It requires vast levels of cooperation as well as competition. Obviously, the vaccine companies are competing with one another, but that's the least important part of it.
Right, but they're competing, but I bet you do, but I'm quite sure when the movie version of this comes out, and I hope we all have to get to see it, that we'll also find that the companies were collaborating to crack the code on this disease. It's not possible they could have moved as quickly without a shared understanding among scientists that helps seed this kind of change. And so,
exactly, and minimizes that. The act of competition is minimized in relation to the act of cooperation. So,
yes.
Yeah. All right. Well, I'd like to open it up for questions and see what we have here in the box. And this is good because it relates to something we haven't talked about so far. This is, how can we incentivize and set up design systems that reward positive behaviors and long-term thinking? And the follow-up to that is, companies are switching to permanent remote work. Companies are investing in, some would say, invasive people analytics. It says, I find this to be a potentially poor design system that can put the employee at risk. But I think maybe concentrate on the first part of this, is incentivizing and setting up systems that reward positive behaviors or long-term rather than what we have now.
Well, I think it is a question of design. I'm very drawn to the work of those people that work in the kind of circular economy and who naturally think in terms of connected systems and continuous change and kind of the connection between, as opposed to isolating the firm as if the measures can work if they're consistent only with kind of firm specific outcomes. And so it is, I think it's also about design because it has to work well within a specific industry and has to work well for a specific company. So I don't think there's just one way to do this, but I do believe that we can take, back to this question of how do you design systems that help us analyze what's going on, understand it better, diagnose where the problems are. I'm drawn to what we used to call the quality movement. I suppose most people on the wouldn't I actually had a reviewer once say, "What are you talking about? What is this?" Oh, right. This is a generational problem. What is today is called lean manufacturing, and has some of the many attributes of something that we used to call total quality management, TQM. And the idea was you're never done. You need to empower your employees. You need to embrace them because they are the front lines for seeing when something is wrong. Empowering them to make the change or to stop the process. Where was that at Boeing?
Yeah.
Boeing, it is the heart of our manufacturing system. You couldn't find a company that was more emblematic of what's possible through design and through manufacturing and implementation. And of course, it had become a complex company that manufactures all over the world and assembles and doesn't just manufacture in the US. But that's true for most large enterprises. And getting those systems to work well, I think, is really, something that you probably understand much more than I do. So I'd be curious about your thinking about how you actually do that to reward the behavior inside companies to really stay focused on what the long term requires.
I think it's hard. The couple of things, I think you alluded to this earlier, that I think I learned this from a sociologist, that once you use a unit of measurement as a goal, it's no longer a unit of measurement. It's no longer an honest unit of measurement. It's become something that can be manipulated. And I don't know. We're grappling with this at Patagonia. Is how do you really integrate environmental and social metrics into the whole picture that are useful, but not diverting, that can't be gamed. I'll tell you a brief story. When I was sales manager 30 years ago, and we took the reps off commission and put them on salary, and I devised the world's most complicated bonus system for them. I mean, I just had it. It took my assistant, ages to work this out, to calculate it every season. Based on how much employee education they did on the products, the number of visits to the dealer, the sale, et cetera, et cetera. Anyway, I had one rep who just got 100% one year. And I said, "Oh, this is so fantastic. You nailed it. You did such a good job this season." And he said, "I did the same job I do every season." And that really, that struck home. And it was true.
Yeah.
He always did that, but the numbers happened to correspond to the numbers that I gave him that season.
Right.
And so I'm skeptical of incentives that also don't take into account the non-monetized values of employees and also of enterprise.
Absolutely.
Yeah.
And of CEOs.
Yeah.
Again, this call I just got off, which was on CEO pay. I mean, this idea that somehow we're going to solve this system by taking discrete measures and embedding that in CEOs' pay, to me is a false idea. We know, however, what doesn't work. Single objective functions don't work. I mean, companies as complicated as yours are these massive global enterprises, a Pepsi-Cola or a McDonald's. They have remarkably sophisticated systems for figuring out how to deliver the product. A high quality product that is well priced, is consistent across the globe. This is not easy to do. And it certainly doesn't lend itself to a single objective like share price.
Yeah.
So we built this belief into our narrative that somehow if we manage to the share price over the long haul, that everything else falls in place. And I think this, the profits and the stock price are an output. They're not an input. It is, and it's one of the challenges of we've worked for years in business schools. And it's one of the challenges of working in business schools today is that I think our finance classrooms are still holding us back, that they're still embedded in this narrative that of kind of measuring things that today are largely unmeasurable. And so, something like 80% of the value of firms is attributed to things that are considered intangible.
Yeah.
Reputation, trust is a big one. Employee loyalty, customer loyalty.
Engagement.
This license to operate, employee engagement. So that's a good example of where companies, they don't hold up their employee engagement scores for everybody to see. They're designed to understand what's going on with their own enterprise. Are people showing up, understanding what their job is, willing to work, committed to the enterprise? Are they seeing the big picture and the small picture of what it means to succeed? And then they use as a diagnostic, not to kind of say we're the best place to work, but a diagnostic that says we know where we need a course correction and we need to go deeper. And so, it's remarkably complicated, but it's obviously an important question how to do this well.
Yeah, all right, thank you. See, we have another, this is an interesting question. How do you see international organizations like the UN and WTO leveraging or perhaps expanding their power with respect to tackling these globally relevant issues in the business world? And I imagine this question connects to the whole question of SDGs, which Sustainable Development Goals from the UN, which has a big effect on European business. And do you think it will start to have an effect here now that we have a change in administration?
I think we had a moment where we could see more clearly the European, we were looking to them for leadership, companies like Nestle and the like. I was at the table when kind of worked early on when the UN Global Compact was created. And this is many of you would know this organization. It was essentially an initiative that came out of the Secretary General's office, run by a wonderful man named Garrett Kell, who built on some work that John Ruggie, who is deeply engaged in human rights, was doing to essentially say, can we come up with a set of principles here? We cannot do the work of the UN without enlisting, it's the same premise I started with, without enlisting global enterprises that in fact are the median exchange around human rights and around labor and around coarse environmental issues. And so they basically looked at the UN's own principles and said, which of these apply and which of these can we hold out? They ultimately had 9 principles that came from the great protocols around human rights and labor and environmental standards. And then they added another one around corruption. And it has been a remarkable organizing principle. And they knew well enough to know what would continue to operate at the level of the Secretary General in terms of bringing people to the table. But then they unleashed local communities across the globe. I mean, there are thousands of organizations that exist at the community level where you really look eye to eye across the breakfast table at another executive and work to solve these problems together. And so I think the UN has done some remarkable work. It was not easy to pull off, and they were highly criticized for being willing to work with business, and there was a real fear, just like there was at the Ford Foundation when I first started working at these issues, that somehow we lose our soul by trying to figure out how to work with business. Can't get there without it. And I think the SDGs are a great example of some positive change and ways to kind of elevate what's possible and to invite business to the table in a new way.
Yeah, all right. I think that the phrase eye to eye is important. I think the more you have, when we get past COVID, people who are at the table with each other from these different groups, it provides a, when people are concentrating on something like COVID, for instance, on solving a problem, or when they're concentrating on the health of a particular community, it becomes easier for the different elements of society to cooperate. It's not just business as this kind of massive force, it's the people who provide the products and provide the services in a particular place where people live. And it becomes less of a contentious matter and more of a matter of, okay, this is this is what we face and this is what we have to do. Another question, what advice would you give executives that find themselves in the upper middle, i.e. responsibility for potentially big teams and budgets, but not able to set the really big agenda items and, for example, refreshing the vision and the mission at the top?
Is this about kind of middle management, do you think, the question, or?
Yeah, upper middle management.
You know, I think change agents happen wherever they are, but you know, one of our fellows once called, you know, they call it the mud layer, you know, and I've had other people say that in spite of my own kind of skepticism about that change happens as a result of being able to hold up data that says this is a way forward. I think much more about leadership and experiences and things that change people's way of thinking, and they're almost what they believe to be true, that those are more profound. They're much closer to the question of mindset that you know, that systems thinkers write about. So getting that orientation right, like what do I actually believe to be true? I write a lot about people that influenced how I think about this. I wrote about Walmart, for example, and the CEO of Walmart in the kind of moment that in the wake of Hurricane Katrina, that ultimately brought Lee Scott, who was then CEO, to the table in a new way to say, you know, what's our response now, having had remarkable positive press for being the first company to kind of send in, you know, trucks full of diapers and water bottles and the things that people needed who were stranded inside the center of New Orleans. And he had this real epiphany about it. And it was kind of, you know, road to Damascus kind of experience. And the work that you all did with Walmart, well, that started after that moment. So I don't think as much about what we have to do, but I do believe with kind of middle managers, but I do believe that that's where the data maybe matters the most, because it does allow for a different kind of conversation. When we can show how important trust is as a factor in employee support and growth, when we can demonstrate how, and we can, the data is there, how critical a robust culture is to the success of the enterprise, I think those things enable a conversation with those people in the middle who see the pressure from the bottom and the top and are, you know, being told one thing and, you know, maybe being asked to do something different. And, you know, that's kind of the best I think I can do with that. But we believe deeply that change agents can happen at any level. And we work a lot with, we have a wonderful program called the First Movers Fellowship, which find our website, and we're happy to introduce you to it. But it's really about supporting these change agents, building their skills around, you know, deep listening skills, their ability to frame or reframe a problem, and to do it in a way that's aligned with what the company believes is important. So how they frame their mission or purpose or their most important goals. How do we work with those things as opposed to be an agitator that is working against them? So there's you know, lots of different roles for how change takes place. But I saw a question in the chat asking about the name of the book again that I mentioned. I believe it was The Divine Right of Capital by Marjorie Kelly. So I wanted to just say that out loud and before that question gets away from us.
Okay. Do monopolies and consolidated markets act as barriers to making capitalism more sustainable? Is increasing competition a lever for this?
I'm going to have to go and find this in the chat and read it again myself. So wait, say it again.
Yeah, do monopolies and consolidated markets act as barriers to making capitalism more sustainable? Is increasing competition a lever for this?
This must be a Yale question. Do monopolies? Yeah, I think they probably do. You know, change happens a couple of different ways. Certainly monopoly power could drive change if you had the right kind of,
Mhm.
impetus at the
That's in
top.
China. Yeah.
Yeah, that is China. But I think that generally speaking, I think it has not been an enabler. I mean, I think what we're
Mhm.
seeing so much out of the tech industry is a real failure of monopoly.
Right.
The kind of failure to examine the actual business model and what it's producing, I think, is a failure of the monopolistic system, and the way in which there's a wonderful article that was written by Charles Duhigg, who wrote The Power of Habits. Some of you may know his book. He did a piece it's in the New Yorker, I think it was in December, maybe. And it writes about WeWork, and it's really about the venture capital industry and how that industry actually operates. And it's, that it decides who the winner is before they're even, before they really are in the game. Pile on capital, make it possible for a company to operate for a period of time with disruptive pricing in industry, even though they're not profitable, and to kind of take over an industry. The writing about WeWork is important because when WeWork went into business, there was already a culture and a community of these kind of co-working spaces. And it was kind of like the craft beer industry. They competed, but they also learned from one another and built better enterprises as a result. So I would say, I think that that's a fair question or comment about monopolies and their, building monopolies should not be the provenance of venture capital. I mean, that's a real abuse of the system.
All right. We're kind of close to the top of the hour, and I'm sorry that we haven't gotten. Let's see, maybe we have time for one question, and then I want to close out, but just reading the last phrase in the book, which I was taken by. So this last question: do you think that the market can self-regulate in terms of shifting focus to a wider variety of stakeholders instead of investors, or does government need to step in, and can it even do so smartly?
This is a tough one. We're on a new, we're at an inflection point, right? We have a new administration. The new administration is showing lots of commitment to things that I hold dear. Certainly climate is the issue that keeps me awake at night. Because of the kind of permanence of the design that of what we've been designed to do. And there will be a point which we won't be able to ratchet back. And I believe in this case, it's absolutely critical to have governmental intervention in getting a price on carbon. Let the markets work, for God's sakes, by getting something priced appropriately and drive that through consumer behavior and beyond. But I'm a believer that the real agency is inside companies. That increasingly today we have new talent coming in who are much more inclined to be listening carefully to the community of interests that they lead. CEOs today, they are CEOs of communities, not just their own enterprise, or that enterprise is really made up of a network of communities. They are leaders of an ecosystem that they influence and that influences their behavior deep in the supply chain in all respects in terms of natural resources and beyond. You don't get there without a special kind of a leader who is willing to manage differently. And I think coming out of COVID, one of the things we're going to see is we're going to see a lot of turnover. We're going to see a lot of turnover in boardrooms. We're going to see a lot of boomers that are sick of being on Zoom calls. We're going to see a lot of people in the C-suite who say, I stayed to get us through this crisis, and it's time for somebody new to take over. And it is my hope, and it is my belief that we'll be bringing some new energy to some of these complex questions. And that I believe that, much like with B Corps, that there is real agency that exists in the executive. They do choose the purpose of the corporation. they do have the ability, they have many choices that they make that are absolutely critical to addressing inequality, economic opportunity, racism, the kinds of relationships with communities that on which the company depends for goods and services of all kinds. These are critical questions without even getting into all the complex environmental issues that we've all been talking about. So I'm a believer. What can I say?
All right. Well, I think that's a great grace note on which to conclude. I'd just like to read this last few sentences. The design of business and society is a continuous relay race that will never end. But there are unmistakable signals of irreversible forces that place us on a stronger footing than when I began this race 20 years ago. The new rules not only are written, but are producing real results and in time to tackle the unprecedented challenges facing our world. So there's a lot. We've talked a lot in this hour about problems, but there's a lot in the book pointing the way to go forward to address some of these problems and also to help heal our planet and our community. So thank you so much, Judy.
Thank you so much. Thank you to you, Stu, and thanks to all of you who participate and who have remarkable ways in which you're engaged.
All right, thank you.